Hello, it's Brad Laurie, your BlockchainBrad, and today I am very honoured to speak with Nick Fett. He is one of the key members of Tellor, and this is a special interview. It's the first one for 2020 for me, and I've specifically chosen Tellor because I sincerely do believe in decentralized oracles for real use case. Nick, thank you very much for being here.
Happy to be here, Brad.
Likewise, mate. Now, I've taken the tie off because I really do want to just explore everything about what you've been doing, all the updates, Nick. But before we do, I just want to explain to all the viewers, I have invested in Tellor. I haven't invested much, but I am about transparency, just like the blockchain. So it is important you guys know that. This is completely free in every way, and I will not be doing any paid sponsorships for Tellor now or later. So Nick, let's clear this up. Let's explain to the people exactly why we need oracles. And if you really want to go into it, just a refresher of what an oracle does.
Sure. So kind of the 101 for an oracle.
Yep.
Blockchains in general, so Ethereum is the main smart contract platform. It is self-contained. So any smart contract platform, it can't speak to the real world, or as we call it. So like if you have a smart contract that needs the price of Bitcoin on an exchange, or say the price of oil or the weather, there's no way to call, say, weather.com or call an API of an exchange. You actually have to have somebody manually input it in there. So what this does is this severely limits smart contracts. So this means that any smart contract on Ethereum can only refer to events happening on Ethereum. So we actually stumbled upon the Oracle problem in our past startup. We were building out Daxia. So Daxia was a derivatives protocol on Ethereum. So basically you can bet on the price of something. Say that you can bet on the price of the S&P 500. What you realized is that we would actually have to manually enter the price of the S&P 500 at the end of these contracts, and that's sort of a no-go, because that means we're the centralized party now that gets to say who wins and loses. So it doesn't quite pass the censorship resistant test. So you need a decentralized oracle, which is a decentralized way to go get, say, the price of the S&P 500.
Right, and Nick, we've talked about this at length before, about that keyword of decentralization. Often it's thrown around quite loosely throughout the blockchain domain as well, but you really do genuinely stand for decentralized oracles. So can we just touch on that a bit more, dig a bit deeper, and understand that in the context of other oracles that do exist, both beyond blockchain and within the crypto arena?
Sure. So there's like a wide spectrum of decentralization when it comes to oracles. So like you could assume that, in our example of, you need somebody to place the S&P 500 price on chain. There's a whole bunch of different approaches. So the first way is the completely centralized thing, where I personally enter in the price of the S&P 500. That is completely centralized. You can have a slightly decentralized one. Say maybe you, me, and some other guy that we know. The three of us will enter the price, and it'll take the median.
Right.
That's a little bit better.
Like Maker do with their 15 for the multi-sig.
Exactly. So like that's like the maker. So it's better than just one party.
Mm-hmm.
You have to corrupt the majority of those people in order to break the median. But if they're known, it's sort of, this is, I like to call it like the EOS model of oracles, where you have, this like known delegated proof of stake type system. And there's other methods as well. So like one other decentralized type you could do is say like an augur. So like you could just create like a prediction market for the price of the S&P 500 and augur, and it would eventually, you could derive a price from that.
Right. And Nick, we've seen the likes of, for example, Gnosis, Augur. You've been affiliated with them for a while now, since Berlin. And I have been following along with a lot of your content. But what is interesting too is that you see the likes of, for example, Chainlink, and then you see, and they're obviously very well known in the space. You talked about staking in relation to whitelisting there even. And if you even go all the way back to Oracleize, for example, those services are all out there. But the one big thing that they don't have, many of them anyway, is that push for decentralization and the proof behind it, that the code and the approach and the monetary policy backs that plan. So do you want to tell us a bit more about why you're so big on decentralization, especially coming from that derivatives protocol that you're building with Daxia?
So like kind of why we're big on decentralization. I think it's just, it sort of goes back to why you're building on a blockchain in the first place. If you look at, say, a Bitcoin or an Ethereum, like what's the purpose of these systems? Like why do they exist? And like sometimes you'll hear like, oh, we're disintermediating or something like that. We're making a more efficient system, but that doesn't really pass like any sort of litmus test. The big reason that these things are here is sort of censorship resistance. These are things that can never be shut down. And that's the exciting piece about Ethereum and Bitcoin. And that's why you need decentralization. Decentralization means that nobody can shut this thing down. And that to us is what we're going after.
Right.
So, yeah. So I think just building things on these networks that actually make sense. If you're trying to build, like we've all seen like a Ripple or something like that, and it sort of struggles because it doesn't quite, like, is there a need for it or something, is usually the question that you would go for, like, why a blockchain?
Exactly. And mate, you've also mentioned, in discussing the imperative of decentralization, that it's okay to have those admin keys, in the back end. And we've referenced, many people in the space, the techies and I guess the educators, also have been looking at CeFi as perhaps, one of the starting points for the movement of DeFi. We see a graduation towards decentralization as the ultimate goal. We talked about that in the last interview. So do you think, mate, that, really it's about reframing, reconceptualizing finance, enterprise, is the common goal DeFi as opposed to the common proof right now?
Yeah, I don't know if I can speak for the space as a whole. I think, yeah, like, the big thing that you want to build are just things that make sense, I think. So whenever you're talking about like these admin keys and things, like, where you just really have to remember now, like, a lot of DeFi at the moment, it is still really experimental. And that's fine. Like, you can have these centralized pieces as we sort of build it out and as we're experimenting with it. But you want to make sure that we really stay almost philosophically pure as we continue to move towards like the ultimate goal of decentralization, because like you're really never going to, you see it a lot, whenever you're trying to build things in a decentralized way. Like, I'm sure you've talked to a billion
Right.
dApp developers at the moment. Everyone's like, oh man, the UX is awful. Like, this is so hard, and that's usually whenever someone's like, okay, well, we can make the UX so much better if we just centralize this piece.
Right.
We'll just run it all in a database and just send proof to the blockchain or something like that. And that's like sort of the Achilles heel of the space, is that we always shoehorn in these centralization pieces to get more users and get
Right.
sort of that product market fit right away, and it's tough.
And Nick, you must find it quite comical that there are so many startups out there professing to have degrees of decentralization when in fact perhaps they're just utilizing the merits of blockchain to, create some sort of
the fundraise.
Right, short-term shill, essentially.
Yeah.
So let's go back to you, though. As I've publicly stated, I am a huge supporter of Tellor for what you're trying to build, and the imperative is there for oracles. Now, you have a hybrid model, and I'm not going to lie, Nick, I like it. And the reason is because you have the proof of work with the staking incentives for those miners. Can you tell us a bit more about why this is so hybrid and novel and important to the success of Tellor long-term?
Sure. I mean, it's all sort of, the way that we built Tellor, to explain for those who are listening first time, is we have miners. So, we have a decentralized oracle, and somebody can come to our system and say, I want, say, the price of the S&P 500. And then what we have is a system, a decentralized network of miners. So anybody can become one. What you do is you stake 1,000 of our tokens, and then you're allowed to compete at proof of work mining. And the first 5 miners who win that proof of work challenge, so they're just guessing random numbers on their computer, they get to say, hey, this was the S&P 500 price. And then if any of them lied, what happens is anybody else can say, hey, he lied. They submit what's called a dispute, and then it gets put up to a vote whether or not his tokens get slashed.
Right.
So it's really simple kind of crypto economic principles that underlie the system. And the reason that it sort of works is because one of the big reasons we didn't want to use like a pure just like staking all the way was that if you have the holders of your token voting whether or not a dispute was correct, and the holders of your token also correspondingly the ones who get to say what the pieces of data are, you have like the same people entering the same data. So with I think you want like different people, like, and that's actually what we found about miners, which is super cool, is that miners are actually completely different people than the people who like buy and stake tokens, or especially like participate in your governance protocol. And I think you have this big time with Bitcoin, for instance, and Ethereum. You have like the mining community, which is proof of work, and then you have like the developers and the staking people.
Exactly.
And the fact that you have sort of two competing parties fighting against each other almost is actually a good thing for decentralization, because it means one party can't really just go and like upgrade as they feel like it. Right. You have this, sort of balance, if you will.
Yeah, and Nick, you mentioned the 1000 TRB. That's the token for those who are wondering. Now, there's been feedback from some members of the community, and you do have, a community that's really focused on the technology. And some are saying, well, that might be a bit high for the average person trying to participate in mining. What are your thoughts on that?
Well, not really at the moment. So if you look at, like it's proof of work. So, you need like FPGAs or really fast GPUs to kind of compete at mining. So like if you look at the amount of GPU processing power you're going to have to put behind your proof of work miner, the stake is sort of, fits with that amount. If you're just trying to stake $10 and you're wondering, like, to compete at proof of work, you have thousands of dollars worth of equipment sitting behind you anyway. So, and you want it to be high. Like we hope that everyone's just honest with it, so having sort of that big stick that you can whack them with and slash is really a powerful thing, because it makes the cost of break that much higher.
Exactly, that staking slashing is really important. And if you have that active dispute system built in now, it's active, which is great to hear. Now, one of the things that I really was fascinated by was the inflation cuts, the decrease in the block reward as well. Nick, I don't want to FOMO this, but the reality is that this is like a halving on steroids, really, even though it's longitudinal, even though this is over a year, it's substantially more. When you look at this from the 5-to-1 model. So do you want to tell us a bit more about the numbers, the facts with regard to this plan?
Yeah, so it was sort of a, we have some literature out there you can read that we wrote, and we liked kind of the constant issuance model. So, we don't have a max token supply or anything like that. Mm-hmm. We like inflationary rewards, and you want to continue doing it. But when you start at a 0 token supply, so say you start at 0 and you add 1 every minute. What happens is that if you add consistently over the same period of time, like your inflation rate, the amount that you add in the first year is the exact same that you add in the second year. That means your inflation rate at the end of year 1 is going to be 100%.
So 140%.
Well, we're only like, 7 months in now to our system. Right. So we're actually at like 140% inflation. So like the monthly rewards are, that we print a whole lot of tokens every single month, and it's that's really, really high. So there's basically little incentive for people to hold their token. People, even miners who have to stake, if you don't assume a massive demand growth, it's hard to sort of justify staking and locking up 1,000 tokens, because it might sort of go down in price and
exactly
your amount of numbers. So this was just a change. So the change that we did, we were going to reduce the inflation rate from 140% down to 17% over a year, just to kind of get more in line with kind of traditional crypto inflation rates.
So a move from 140% down to 17%, as I understand it, over the year, Nick, that's going to reduce the block reward from 5 to 1 over that time. So looking at the math, purely from a tech standpoint, surely that's going to attract a lot of attention for miners. It's got to.
Hopefully. Yeah, I mean, that's really the goal, because you want, if you think about what these block rewards are, like whether it's in Bitcoin or Ethereum, you're paying through inflation for something. So like inflation is sort of that's what the holders pay. So like inflationary rewards are basically the holders of your token paying for something, because you're being penalized as a holder in order to pay for this. And
Right.
if it's the security of your system, that's a good thing. You want to pay for it, and that makes sense. Like, if they're doing a whole lot, but paying them, 140% a year to do this thing that they're securing, it might not be worth it, especially
Right.
if the holders aren't willing to do that.
And Nick,
There's, yeah.
sorry, go ahead.
No, I was gonna say, it's definitely a variable that you want to pay close attention to in any protocol. Like if you look at, so even Bitcoin, there's been a lot of talk over the past few months, like about like, well, if Bitcoin has, when they eventually go to a 0 block reward, they're going to have security issues, just because will transaction fees be enough to sort of secure the network? And then you can look at another super interesting case, which is actually synthetics, who
Right.
actually really ramped up their inflation rate because they wanted to incentivize people to do things more. So they were using those inflationary rewards in other ways. So they're really powerful, and it's one of the things that really excites me about the space is that people are actually playing around with inflationary rewards, because I hope that carries over to the real world too.
Right. So the model is still, has inflation built in, but disinflationary by design. I guess I could argue. But Nick, do
Yeah.
you see also, how rapidly this is going to drop? I mean, obviously you do. You help design this and architect it, but in the next 6 months, there's quite a significant drop, in that bell curve, and then it sort of teeters off into a little bit more stable decline after that, and it does go block to block in that 10-minute time, as well as you mentioned. So do you suspect that there's going to be a lot of attention brought on you just simply from the architecture, from those amendments you've made, regardless of high speculation and the inadvertent attention you're going to get from people like me speaking about your utility and your imperative value?
Sure. Yeah. I mean, well, right now, like, the miners, so if you assume, like, basically, which we do have, are for-profit miners, so they get the tokens and they dump them on the market. So, right now it's about 3,600 TRB a day that they dump on the market. If you reduce that, by 4/5, you assume that the sell pressure is sort of really alleviated. So you would think that, somewhere along the line, like, you're going to get a little bit more attention, because the balance between the sell pressure and the buy pressure changes.
Right, and that's all kicked in now as of March. And once again, this info is not for FOMO, but this is pragmatic. This is about what Teller's trying to do, because they are all about trying to be real use case, B2B. They want to have more clients, but this is the engine that's going to make that possible. That's why we're talking about this. Now, Nick, let's explore off-chain data, off-chain price feeds as well, in the context of what you plan to do in the future with references to computation. I mean, there's a lot more scope for Teller than just those off-chain price feeds as well in your roadmap.
Yeah. So I think, it basically is just creating the best sort of technology that we can create is really our goal, and trying to find where the space needs it. Whenever you talk about like a decentralized oracle, the big problem that, we admit that the flaws in our current system. Whenever you request a price, the classic example is, like, we've been using the S&P 500. If you have to use, say, like an API from some website, now that's centralized all of a sudden, because now you're relying on that website. That's a problem. You don't want to have to rely on one website. You want sort of people to sort of have discretion as far as what it is, and you want to say either have your miners manually input it, so it's sort of robust to the API failing, or you want to have things that we're looking at, which other protocols have looked at as well, which is sort of like you could even have a peer-to-peer network of people passing around price information. And these are exciting things that you can do to really take away any centralized point of failure.
Right. Well, Nick, let's talk about that. I'm going to dig a little bit when you start to hint those things.
Sure.
Now, I've been listening to you talk on ADO, the Alliance of Decentralized Oracles. I've dug a bit deeper into it and had a look. It's clear from what Brenda said, the CEO, that you're looking more at standardization. You're looking at like a really holistic approach, collaboratively with other startups or other oracles, particularly. Names like Chainlink, Band, Zap have come up, in those discussions. You've had YouTube with some of those parties. So let's just get real about this. I mean, what is actually happening with the plans for this this standardization? Even on the GitHub, there's references to it.
Yeah, well, the big thing we have up on our GitHub is the EIP. So we're trying to create a standard. So there's no reason that, let's say the main requested one for all oracles on Ethereum is the ETH US dollar price. You want the off-chain ETH US dollar price. But right now, if you want to go to Chainlink, if you want to go to Tellor, if you want to go to Band, they're completely different ways that you have to request it. So you have to know different IDs. If you're building a smart contract, it's a whole lot of work to build it in. Having a standard that says like, hey, I just want price for, and then like some ID that represents ETH US dollar, and you can go to any of the oracles, their address, and it gives it to you. Mm-hmm. That's what standardization is, and that's going to actually it'll enable sort of plug and play of oracles, because like you can look at like other standards in the space, like the ERC20 standard really just skyrocketed. It allowed you to create a DEX. It allowed you to create all of these things that interact with ERC20s because you had a standard in place. You knew what functions you could call. And that's what we want to do with oracles. Because right now, one of the biggest, there's two big things that prevent us from kind of getting adopted by some of the larger protocols. Mm-hmm. The first would be, well, what if you as Tellor fail? We're going to build our whole code around you. Well, now if you wanted to build your code around us, well, yeah, but you can just have in there some governance protocol. You can just switch your address to Chainlink's address or to the Band's address, or Witnet when they're launched. Like, it would be very simple to do, and that makes it okay. Like now we can take a risk on building this. It's sort of all the same. And the other piece that you can do, if the sort of hesitation is like, so if you go talk to a maker or a very big protocol, okay, so we're guarding $50 million of fund, and Tellor has a market cap of $4 million. Like, how can you do this? And the answer is that we actually can't. Like you could literally, like if you wanted to break their protocol, you could just buy up all the Tellor tokens.
Yeah.
Not obviously ignoring liquidity concerns, but it's a valid concern. But let's say you had a standard in place. You could easily take a median of all of the decentralized or centralized oracles out there that prescribe to the standard. Say there's 7 of them, and you just take a median. Now all of a sudden your protocol is very robust. Now all of a sudden it can handle, say, a $50 million valuation.
And Nick, I just want to jump in. I don't want to FOMO this point as well. But when you start to talk about this alliance, and that's exactly what the ADO is, you'll be leaning against the reputation, the support of something like Chainlink. Now, obviously, there's a synergy there. You're not designed to be competitors. You are different by design.
Right.
And obviously, you guys, led from both yourself and Brenda and even Mike, you're all looking at those, dare I say, partnerships, but more so that collaboration, so that you can consolidate and optimize each other as oracles. How far are we into the ADO? What's we're in phase 1 now, I'm suspecting, but what kind of dialogue are you having? How serious is this getting?
Yeah, so our goals right now, so it looks like probably by the end of this month, we're going to finalize the EIP. Now we're just having discussions about like, okay, well, what should the, symbol be for ETH US dollar? It's sort of these, well, we use this, but we use this. So who gets to win? Like, we're like, we don't care. Like, just pick a symbol.
Mm. Well,
It doesn't matter.
this is going to be significant news over time, Nick, because you're starting to
Yeah,
then also garner support by default because of this alliance. Obviously, Chainlink is number one when it comes to oracles in terms of being known in this space. Their
sure.
marketing team is absolutely second to none, and they've really become a prominent name in the space. Your association with them, that's surely going to have a very positive effect on you as you move forward.
Yeah, I mean, maybe. You know, we just think it's so early in the space. Like, nobody's, as far as decentralized oracles being used, it's the biggest competition we have now is like the centralized multi-sig or something.
Yeah,
It's just convincing people about the right thing to do, and anything that we can do as a space, just education wise. And we feel really strong that if we can just educate people on why you need decentralization and why you actually need a decentralized oracle, and give them options, give them things that they can use, then we'll be fine in the long run. And it's a lot of these founders, they're good people too. So it's great to catch up with them and really just talk about some of the issues in the oracle space and what we can do to just like when you're talking to all the other decentralized oracles, it's like, listen, like, we're all in a team against the centralized oracles. Like, we would rather you use any of us and we can compete with each other versus like just saying I'm going to input the price myself. Like that's our biggest competitor. So just continuing to work together on that, and then we can hash out who wins in the
exactly.
long run.
And it's like Mike said in a recent interview, or one of the updates that you do for Tellor, and I will plug that. Thank you for doing those updates and those longer discussions. I have been watching them. He said one of the market fit really is those who espouse decentralization fundamentally. And that is the truth, because we're still so early in this space, as you've both referenced, and Brenda also. And it's a long road ahead to really get clients on board, really get those see that customer switch come to fruition for Tellor. But right now, we're seeing a lot of people right around the globe take this seriously as not just a narrative anymore. Do you also see that in your role, as one of the leaders of Tellor, but also with your background in the CFTC, the blockchain space? Do you see more people taking decentralization seriously in the institutional enterprise domain?
Yeah, I think people are starting to realize, like, you don't see as many blockchain prototypes these days. It's just, people are starting to realize like what blockchains are good for, what they're not good for. And especially with decentralization, like, if at the end of 2017 you were talking about, oracles and the need for decentralized oracles, you were like a weirdo.
Yeah.
But now it's very well known. We've talked, like, just this week, we've talked to like probably 4 or 5 different projects, and they're starting to, like, they get it now. Like, they're like, like, hey, like, we're okay with a slower decentralized oracle. Like, this is, we're happy that you guys are building something that makes sense. And more people are coming around to like just realize, like, you saw like the B0X hack, you saw like the synthetics oracle attacks, and people are realizing now, like, hey, maybe we don't just want to chase the DeFi protocol that just came out last week with the highest yield. Maybe we want to look into what's underneath the hood and how the team feels about decentralization. And those things are starting to become more and more. And I think it's just gonna, the ball's rolling, and it's just gonna keep going.
For sure. And Nick, I really like that you mentioned that you've been talking to some prospective clients, but let's say, looking at discussing your value with them, but not disclosing them. And I'll explain why. It's because obviously I've talked to a lot of CEOs in the past, and there was a propensity in 2017, 18 for more of the shill approach, the partnership, as opposed to authentic partnerships that were meaningful. Now, you guys have always said from the start, you're not going to do that. And even now, I'm not even going to press you on those partners, because those days need to be gone. We need to start making sure that the proof is in the code, the proof is in the functionality, proof is in the utility. And then once you come forth with an announcement, surely that's going to be because it's legitimate, it's real, and it's not designed, over a 6-month period of pump and shill and crap. that comes out just to optimize price.
Yeah. So, most partnerships in the space are relatively meaningless, and we really just wanted to move away from that. Like, we wanted to do something where, like, listen, like, we'll tell you who we're working with when they're actually requesting data from Tellor, when they're using us. But even then, like, you shouldn't rely on those, the people, maybe if you're really interested in looking to trade or something like that. But the real thing you should look at is like, hey, how much are people paying to use Tellor?
Exactly.
Similar to like Ethereum, the thing that, Ethereum is like the example of where I would want to be eventually with Tellor. Like, whenever like we used Ethereum, we didn't submit a partner, Ethereum didn't announce a partnership with Tellor that we're going to use Ethereum. We
Right.
just used them. So like whenever you become actually the standard, you don't have partnership announcements. And, like, ideally, like, I would love like a whole boatload of anonymous protocols who we have no idea who they are, sort of adding value to the network and creating security on the whole network. And we have, we don't know who they are, and that would just be perfect.
Nick, I'd like to see that too. I mean, right now, that's not the scenario because you're bootstrapped. Haven't got a huge runway, and you're very frugal, as you've mentioned. So there's a long way to go for you. But 100% agree. I'd love it if there was no role for me even to try and be that educated. It was just a given that the protocol is going to speak for itself. Now, one of the things that I found really transparent about your team, including you, is that you said that Tellor is expensive and it's slow in comparison to some others. That's a bold statement. It's brave and it's honest. You wanted to explain to people what it actually means and, whether or not you're concerned about that in the future as you start to come forth as a, prominent oracle for the blockchain.
Sure. Well, I think just, this goes back into what we were building originally. A lot of the Oracle research was based around like, listen, we want to create the ability for any smart contract to query any off-chain data. That's really, really hard. That, like, if you do that, that solves like scaling and that solves like connecting blockchains. It's a much different thing. Like, hey, we want a price of something every 10 minutes. It's slower, but it's more secure, and that's what you need built. And the Oracle space in general, like, people haven't, like, I'm sure you've heard of the scalability trilemma.
Right, of course.
Yeah. So the general thing is that, you can't be both, like, fast, secure, and decentralized. Like, you just can't, and people get that with normal blockchain. So, like, if somebody came out and said, like, hey, I have a new blockchain that has 1 million transactions per second, like, you don't even need to look at their code. Like, you don't need to give them the time of day. You just
I have to apologize because I interviewed some of those in the beginning. I remember watching announcements. I won't name a name, but there was one well-respected, I guess, academic and coder, and he was on stage guaranteeing 1 million TPS. And, we were seduced a little bit by some of those narratives, thinking that scalability alone was an imperative. But one thing you've always said, Nick, is that the pragmatic approach has to take precedence. And right now, the blockchain, Ethereum, for example, can do real stuff. You don't need the 1 million TPS. What you need is something that, is useful, utilizing the capacity now. So in comparison to other so-called decentralized or CeFi oracles, let's say, where do you sit? Because you are definitely in the security camp with your architecture, but you've also referenced that there's flexibility for even improving scalability as it's needed in the future. So let's, get really clear about those sort of comparisons and contrasts with, say, for example, Chainlink. It is the buzzword. We still have to talk about that so that we understand your value.
Yeah, so we're definitely, Chainlink is one of those way more instant protocols, or like, the perfect centralized one is like Oracleize. It's like a 2-block time as far as getting back to you, roughly. Whereas we have price updates every 10 minutes. So it's definitely slower, and we're looking at, so, like the V2, we could potentially reduce it down, say, by a factor of like 5. That's what we're looking at. And it's still much slower, but then at the same point, it's usable, because that's the big piece, is that whatever you're building on these blockchains, like we always go back to, what are you trying to build on the blockchain? Like if you're trying to build a high frequency trading app that needs a instantaneous oracle, like you probably shouldn't be built on a blockchain in the first place. You're going to have a bad time because, as people have just realized, like there's mining front running. There's people who are looking at your oracle submissions and front running them. It just there's a whole bunch of problems whenever you try and have these instant finality on these systems.
Right, and you have referenced finality before in that it could actually be an impediment to the productivity of this in terms of authentic decentralized code and technology. So do you see, again, let's just be real, do you see Chainlink as something that is a little bit behind in terms of the decentralized, agenda compared to you, given that you're taking a very different approach with the security model?
Yeah, definitely. So, like I think they would even admit they're sort of not as decentralized as they would hope to be, and it's just like I would hope that they would. It's always hard though, like building as they are, because like in order to become decentralized, they'll probably have to sort of reduce the throughput on their system, and they'll sort of have to, back to the UX issue, like they'll have to make the user experience worse. And that's always like a hard sell for customers whenever you tell them like, listen, we had this decentralized and now we have to take it away. It's much easier to just never have it in the first place, in my mind. Like whenever you build and you start decentralized, then you can scale as sort of it goes. I think you may have like read some of our articles on it. We
definitely have, and I read your Delusion on Liquidity and a few other comments you made
cool.
as well.
Yeah.
And there were so many good points in them, but I wanted to ask you and be really candid about it, because obviously, we're not criticizing Chainlink by any means. They are very successful. They have captured the attention of so many and the imagination of the potential of oracles. But when it comes to you, you absolutely stand by the value of DeFi for the long term. So why align with Chainlink, for example, in the ADO, when it's going to be challenging for them to make that switch into an authentic decentralized oracle?
Yeah, I mean, we're not kicking anyone out of the auto. It's not like that kind of thing.
Right.
We're just happy to have people who are interested and wanting to join. So we're more friendly with everyone, and we meet up with Chainlink at basically all the events, and we're always, I like most of their team. They're all great. So we're very friendly with them, and we hopefully we can work together, because I think a lot of even if there are projects that we disagree with on some philosophically how we build pieces, if it's bringing money into research in the space, or bringing eyes on the space, and even if we can use them and their sort of their platforms to start educating some of these protocols, and if they're the ones that are pushing out, hey, this is why we need decentralized oracles, like that education in general is phenomenal. I hope they continue to do it. So
right.
I mean, it's always great.
Well, the Link Army, they'll certainly be interested to hear that, I think, and also to know that you're not a competitor to them, but more about trying to uplift the value oracles right across the board. Now, Band is another one that you've talked about before. We see the likes of Zap come through and others that are coming. One of the things I found very interesting is that you have the backing of Binance Labs, you have the backing of the Ethereum Foundation, and on top of that, MakerDAO, or Maker rather. Now, that's a big deal. That's almost like a triad of power. And more importantly, connections, Nick. So are you leveraging all of that support to really get the attention of clients and customers?
Yeah, I mean, that's probably the big thing that all of those projects or investors are really great for, is just like, we're basically, we keep up to date on just every single project in the space, and we call them all personally and try and talk to them, because that's sort of, everyone, I think we'd mentioned this on the past call too, like, whenever it comes to getting people to build on your Oracle protocol, it's not like one of these things where you go advertise on Reddit. It's just yeah, or Twitter. It's just
Well, you don't, Nick. Some do. Some teams do, but you don't.
yeah, no, but if you actually want people to build on your protocol, this is about building relationships with up and coming startups. This is about building relationships with current protocols in the space, and you need introductions to them, and that's what these people are great for. They give us that sort of reputation, and they give us a lot of research help, and mainly they give us, hey, look at this project coming up. They need an Oracle. Can you guys go talk to them? And they all do that, and it's phenomenal.
So really,
So
you have open door access, let's be honest, because one thing I have learned in the space in my role is that having that access and relationship with people in the media space, in the VC space and exchange space is just absolutely vital. Do you find that's the same for you and that you do need this to uplift your own platform?
yeah, I mean, like we definitely noticed, like after we got into Binance Labs, for instance. Now a bunch of people return your emails. We're pretty good salesmen to begin with, as far as like where you can reject us 50 times and we're still going to email you until you take a call with us. But yeah, it's really helpful whenever like the head of Binance Lab sends an email to a project, hey, you guys should talk to Teller. That definitely helps and gives you a little bit of reputation going into the conversations, and that's just what it's about, because there's been a lot of projects that we've talked to that are up and coming startups, and like they're just not fits for Teller. They want what their priorities aren't ours, and we can't work with you. Hopefully maybe someday you guys will be able to work with us, but there's some projects that aren't fits, and just trying to find the right ones that are fits is you have to really sort of work on educating them all, and also talking with all of them, building a relationship, because it is a big deal to build an Oracle into your protocol. You're asking, that's sort of why like it takes a long time. So I'm sure you've looked at projects, like some projects are in dev mode for multiple years. Like if they decide to use your Oracle, like it's going to be 6 months to a year to implement like a code upgrade. Like you have to go through audits, you have to do everything. So it's a significant task for a lot of people. So making sure that, listen, they're not just relying on something that they found online or an advertisement. They're relying on like, this is Nick and Brendan Mike. Like they're not going to let us down. And that's what we want.
And to Binance Labs' credit, again, I just want to make it clear, because one of the YouTubers in the past has alleged I'm a Binance shill, and I'm not. I'm not paid by Binance in any way, and never will be. But
sure,
one of the
Brad.
things I found interesting, Nick, was that Binance Labs do a lot of distinct research, and some of the things they've advocated for or startups has been different to the ones that have listed on Binance even. So they've tended to be quite tech-centric, quite code-focused as well. One of the things Brenda said recently in one of her discussions was that it was a rigorous process. Even to go through Binance Labs, it was several interviews. So that's music to my ears. And also the fact that you are rejecting some other partnerships because they just don't align with your long-term view. So kudos to you again. Now, Nick, for those who are wondering about your credentials and all of that, obviously they can go and look into it. But the fact both you and Brenda have economics backgrounds, you work for the CFTC, all that's legitimate. That's something that I like to look at to make sure you have the skill sets. One of the questions, though, is the small size of the team. Do you plan on building that team out in the future as you can afford it with your Devshare? And can you just reference the Devshare to the people who don't know what that is?
Sure. So the Devshare is right now there's a mining reward. So every block, a certain amount of tokens get issued. We get 10% of those tokens, and that goes towards the team and towards the development of the ecosystem. So yeah, that's how we fund ourselves. Since we did no ICO, no pre-mine or anything like that, that's literally our only revenue. And right now there's just 3 of us. So we do have several contractors who are working for us, starting to build out the code, and we would love to expand the team. We sort of our philosophy on expanding the team. We want to stay lean. You want to. Crypto prices are so volatile. You want to make sure that you have the runway if the price that's 50%. So you definitely want to make sure that that's the case, and we also want to make sure that whoever we do hire, like it's because they're sort of a philosophical hire too. You know, they really believe in Tellor. They work with us well. And you know, especially like a fourth hire or something like that. That's like you would want to make sure that that person or those people that we hire next, like they can really just do everything. So yeah, we'll
Especially,
definitely
Nick, because it's all in TRB as well through that Devshare. I wanted to ask you, and it's something I never did before. Are you selling much of the Devshare portion to, again, sustain your runway? You know, because obviously there's not a huge amount of funds available, but I just want to be trying to get that transparency out from the team in paying for the services and the research and for the researchers themselves and the coders. Do
yeah,
you
I
have
mean
to
that's
go
how
and sell a
we're
lot of your TRB to do that?
yeah, we sell most of it each month, and we want to use it up. You know, we save a little bit. We try and stash as much away as we can, but
Yeah.
we also don't want to be one of those protocols that just holds onto it and stashes it. We want to use it to grow the network. That's sort of what it's there for. So, you know, we have bounties that are available for people to go and build on. We want people to earn it, and we want people who are building on it. Yeah, so you know, like we want to use all the TRB every month. We don't want to sit there and hoard it.
Right. Okay. And obviously, as the ecosystem grows, as the network grows, it will arguably be much less impactful, you know, over time when
Sure.
you know you have a significant number of miners at play. Yeah, I mean, really interesting model. I've always been a big supporter of this Devshare because you're invested literally in the long term because you're extracting 10% of the mining rewards all the time. So you have to have more miners. Clearly the numbers are improving. You've even mentioned from the start, you were surprised how quickly miners jumped on board. Is that number really growing now, Nick?
That it's very volatile. Right now we have about 50 miners on the system providing it. But yeah, I mean, as far as just how fast the network's grown and just the level of interest, it has been shocking.
Yeah.
You know, just like how, you know, you always, you know, it's, you sort of put it out there and then a part of you, it's like, oh man, is this going to work? And then whenever everyone just starts to take to it and starts to see your vision and it comes into
Yeah,
play, it's
absolutely.
awesome to see.
And it's great to see that you've aligned with Ethereum to start off with because of the market share of developers that they have, because of the prominence they have in that smart contract solution, you know, in the broader scheme of things. But the bounty program, I found that great because it's transparent. It's all up on a document for anyone who wants to look. I'm sure you have links to that. And I'll make sure there's one in the description below. But you spent about 31,000 so far on very distinct bounty initiatives, and you mentioned that you're flexible with, you know, other things if people want to get on board and do other things. So can you tell us a bit more about the bounty program and that you're, you know, what it's about?
Yeah, so you know the bounty program, it's similar to a lot of other bounty programs. You want to help us build Tellor, you want to do an upgrade to the miner, you have some skills on, you know, you want to build a better user interface for Tellor users. You want to, you know, a lot of it has been, there's been several articles. Somebody's reached out, hey, if I write this article, will you give me, you know, $100 worth of TRB? It's like, you know, like, yeah, like if it's a good article, yes, we will. And, you know, even other ones, like another guy redid all of our documentation for us. And like those kind of things. And it's just great to see the community kind of, you know, these are people like, cause we don't want it to be, you know, cause we struggled at first. We didn't want to make the bounty so high that you would have
A
just
huge
random
shill
people.
factory. Yeah.
Yeah, you know, like you don't want like, you know, bounty hunters coming in. Like the people who have been going after our bounties are like actual community members who are building these things themselves. Like, you know, we had one guy, he built his own, you know, Python library for Tellor, and we gave him a bounty, like, because he just open sourced it. You know, like those kind of people who are like, they're building on it, and you want to just reward them, and that's what we want, because that's, you know, like we like to look at like how Ethereum got successful. For instance, and you look at some of the big reasons that Ethereum got successful, and it was just that, in my mind, there were two reasons. So the first was that like base consensus was a huge part, so they played a big role in they started to fund all of these developer initiatives, and there was actually a way to, get paid to work on some of this stuff.
Right.
And and other protocols need to figure that out, because like, especially if you have a giant ICO and you make all this money, like, if you have 0 customers or 0 developers on your platform, you basically have to pay them, because they're the people who are adding all of the value to your system.
Exactly.
So you have to pay them. And the other thing that Ethereum did, which we've tried to mimic too, is they started out with a relatively low market cap. I always hate whenever projects come in, like they ICO at a $60 million market
like
cap.
Dfinity did this. I'm just going to name them because I remember them, or Hashgraph.
Sure.
I mean, they just come out with such ridiculous numbers.
Well, yeah, but because then there's no upside. Like Ethereum, the reason Ethereum has so many die-hard supporters is that they made so many people like money. They made so many people sort of financially free.
And Nick, could that be because ETH is money in one facet of its utility? Because, there's an argument out there, let's just bring it. Pompliano recently, and I had a very direct, comment back. He made the allegation that ETH is really akin to fiat. I totally disagree for my own personal reasons. But there is this narrative coming forth from the Ethereum side that it's legitimate money, aside from many other use cases that it definitely has.
Yeah, I mean, we get into a really long discussion about what
let's
is
not
legitimate
do that,
money.
Sorry, digress. But let's pull it back
No,
to your bounty. I love that you have that. Now, one of the things that you did have recently talked about, may not be so public, is tellor.fund or tellor.fund.
Oh, yeah.
I love this idea. Very clever, because it's a way for other people, to get involved through crowdfunding mechanisms to really promote Tellor in a way in which you guys really can't quite afford.
Yeah, so this was, I actually couldn't make it out to Denver, but I decided to just do a hack anyway, and I created a tellor.fund, because you actually see, so everybody comes to us and, they're always like, hey, can you go list on this exchange?
Go to Binance, go to Coinbase.
Yes, can you sponsor this event? Can you
pay this shiller?
Yes, can you pay this shiller, pay this AMA person? And
right.
Our answer is always like, no.
Well, they're very expensive too.
That was the key issue. They're very, very expensive. A lot of, your podcast is great, but like a lot of podcasts, they charge a whole lot of money for doing this kind of thing.
Yeah, and Nick, once upon a time I was really critical of that sort of paid aspect. Now, not so much. I can't stand the leverage trading shilling from inexperienced promoters. But in terms of their prices for promotion, that's just, I guess, part of capitalism, and I'm kind of with that. But still, like you said, some of those charges are about $10,000. Some of them are $5,000. So that's a lot of money.
Yeah. So what we did was we created a website where you can come and you can put up there, hey, for this podcast. And then you can have the Tellor community sort of contribute to it. So crowdfund these efforts.
Yeah, I think it's a brilliant idea. It really is, because the community often asks for those things.
Yeah, if you guys really want this listing, or if you guys really want this thing, this is how much it costs. And I'm actually curious, because especially like on the exchange listings or the AMA partnerships, because we, like some of them come to us and are like, hey, like we'll do this for you for this price. And we tell them like, oh, well, we created this Tellor fund thing. Can you post it up there? And a lot of times they say like, well, no, our prices aren't public.
Yeah, I know. It's so disgusting. I know. And they're really insane prices as well. And many of these influencers, they know that. There's a lot of stuff going on. But what matters, though, at the end of the day, is that Tellor fund is legitimate in terms of what the community want to do. So you don't have to always go to those parties that, where there's collusion. There's legitimate educators out there that want to spread the word of Tellor, which I love. So hopefully it incentivizes, your name to spread, but without compromising the long-term approach to liquidity. Because that article you wrote about the delusion of liquidity also reflected on the dangers of short-term, fast liquidity, because we've seen the likes of narratives driving pump and dumps. And that's certainly not something that Ethereum nor Tellor espouse in any way. So, it's really exciting, I think, actually, to see an illiquid market and a more organic evolution, Nick.
Yeah, no, like regarding your reference to the delusion of liquidity, it's just you want, like, I think that it's so underrated in the space that people always want this really liquid markets, these super fast token markets. And like, to me, like, I would have, like, you know, very few exchanges listing us, like just dexes that are hard to use. Um, if you want to sell, you have to move the price. If you want to buy, you have to move the price. It's all transparent, like,
Yep.
how much do you actually believe in it? How much do you want? Because, like,
And
whenever
do you
you
want to
have
mine
these,
it?
yeah, do you want to be a part of it? Do you want to come earn it by a bounty?
Mm.
Because all these protocols, they seem to just want holders to pump the price. We want holders who want to be part of the community. We want holders who want to hold it for the right reasons, and they understand where we're going. Because ultimately, like, whenever you have a token in your protocol, what you're trying to do is you're trying to create a community out of that token, especially whenever you have these DAO sort of tokens.
Right.
So you need the community aspect. You need to like the people who are holding your tokens, and you need to trust them with certain things.
Yep.
So it's really important that you place that civic responsibility on them early. You place that necessity that they're engaged in your protocol, that they're sort of, they know what's going on, and we like that about our community, and we want to keep that.
Right. And Nick, it's interesting because some of those dexes, as you mentioned, you listed on IDEX, for example, not to shield them, but I have spoken with the team and I respect what they're trying to do. A lot of these listings, they come forth because they share that same ethos. When there's significant charges for listings, you have to ask yourself, I think, what's their real agenda? Is there wash trading? I mean, I've looked at some of them and there's absolute evidence there to suggest not every listing, not every exchange party is legitimate. So right now, in my own view and my experience of blockchain, is it's actually good you have few listings. It's great that there's this graduation and this gradual trajectory upwards for your value
Yeah.
based on pragmatics, based on utility. So I think there's a lot of boons for where you're headed and the way you're going.
Yeah, I mean, I wish that more crypto would try and do more about it. Like, it's even Bitcoin and everyone, like, wash trading is
So
sort
bad.
of the name of it. Yeah, it's awful. Like, and it's, for those of you that don't know, it's illegal here in the US. It's pure manipulation, and
Hmm.
it's really hard to sort of get a feel for where the volume is real. But if you just sort of focus on dexes where everything's on chain, like, now it's more honest. Like, it's okay if it's okay if there's a 2% spread on your token. Like, it's
Right, and
not.
having self-custody as well is a great thing. We know
Yeah.
from the likes of Eric Voorhees, he's a huge proponent of giving access and keys more to the people. But what
Yep.
about the regulated side? This is where I get fascinated by your experience with the CFTC. You're clearly a pro-regulation, clearly, to try and sort of clean up some of these issues. Do you think that perhaps some of the regulated exchanges are taking you seriously, looking into this? Because legitimate exchanges should be listing for free. They shouldn't be ringing up saying, let's do a
Sure.
deal.
Yeah, I mean, I can't necessarily comment on any of the regulated exchange. No, I think, yeah, hopefully they do. I think, it's always shocking, a lot of places they'll, like, whenever you talk to them, be like, oh, we need a legal opinion of your token. Like, a lot of legitimate exchanges even ask for, like, hey, listen, we can list you, we need a legal opinion of your token. And it's like, why? Yeah, like, like, what? So basically they want you to go pay some lawyer to give you a legal opinion that says you're not a security.
Yeah.
And it's like, these are, the whole space in general is just, it's everybody trying to cover themselves in case the SEC comes down on them. And
Yeah.
hopefully, but like, my goals for regulation, we want to get the fraud out of the space, and that's definitely one thing that I hope regulators can help with. Just like, you don't want people to fear that when they come in the space they're going to lose money to a blatant
Yeah.
fraud.
And, you know, your experience there was one of the reasons I looked, you know, much further into it, because obviously
Yeah.
you having been such a key part of the CFTC in the blockchain arena was significant as you moved into the derivatives protocol research and planning, and then now this. But Nick, on the derivatives, I wanted to ask you, you are one of the best to ask. What are your thoughts on the serious impact potentially that derivative trading is having on the spot market, on those who are supporting long-term utility? I know you've written an article about it. I don't know if I totally agree with all of it, but what are your thoughts
Yeah.
on the impact it's having, especially with those that are paired now on derivative platforms?
So, like, you know, if you look at economic theory and a lot of papers, derivatives are generally a great thing for price discovery. So, you know, if you have honest markets is the sort of the key. Derivatives can be really great whenever, you know, if you see a lot of shorting pressure, it's usually an indication, you know, that the price should go down. So it helps markets sort of adjust faster, and that's sort of the key of capitalism, because, you know, some people don't like it because, hey, their token, the price is going to go down or something. But if it should go down, it should go down.
Right.
You know, you sort of have to admit that, like, you know, maybe it's overpriced. So, like, just banning things that you know, then you just like blow up the bubble even farther and have a harder crash later. So you don't want to do that. You want to have things for efficient price discovery, and derivatives can and do help that.
Got it. And it's interesting in the crypto though, because it's an uncorrelated or non-correlated environment. It's still very nascent. There isn't a lot of liquidity in truth when you look at the real volumes, the real liquidity. And I think that's got to have an impact on, you know, the increase in the derivative trading, you know, in this very early stage, perhaps too early, Nick.
Sure. Yeah. So I think a lot of it is a little bit too early, because a lot of these derivatives protocols, you know, like the ideal derivatives protocol is one that people are using for hedging things. So these are, you know, you own Bitcoin and you want to protect yourselves against, you know, the price of Bitcoin moving, because you want to sort of use it for something later. Or, you know, like that was like what the derivatives were originally invented for. But, you know, now basically with the invention of, like, if you look at like BitMEX, like the 100x contract.
Yeah, there's crap of
Like,
125x and some will want
right,
to do
like
200x.
these are just lottery contracts basically.
Yep.
You know, like those are not good for any sort of real life utility.
Got it.
Um, yeah. So
And it's good to know for you to have that experience. And it's great also as you start that you don't have those derivative pairings, because we saw the likes of some of those really suffer because, you know, there's just too much volume on that derivative trade for something that just didn't have the spot support, didn't have that volume support. And there was just a lot of manipulation going on. So you're not part of that, which was appealing to me. But yeah, obviously there's a lot happening for everything that you are building. You must be excited for the future with your planning. The upgrades themselves, I wrote down some of the things you mentioned, like the Telescan, the RSR upgrades. I mean, there's a lot you're doing in the background, you know, as you move, you know, forward technologically.
definitely, yeah. So, you know, we're trying to stay kind of on the cutting edge of what's possible in the current networks. So, you know, just kind of stay tuned for a lot of these upgrades. I think you guys will be really pleased with kind of where Teller's going in the future, just because we're going to really stick to our core principles and move forward and make sure that the technology is there for people to actually use.
For sure. And thanks for doing those weekly updates as well. A lot of people appreciate them. The community, even though it's small, it's certainly growing. I've been watching. And you're doing now those core discussions. You and Mike get together and, you know, hopefully the amount of tech in those talks will increase over time as well. Because even now you still definitely raise questions in the community and try and answer them. With regard to Ethereum, I wanted to ask you about your concerns, if you have any, with Prog POW or with Ethereum 2.0. Are you concerned at all about some of the potential risks there, given the ASIC and the CPU, you know, mining debate, the concerns, you know, more generally, forking
I
risks
don't
as
think
well?
yeah, I mean, I'm sort of a agnostic party, and it probably won't affect me directly either way.
Mm-hmm.
Um, you know, it'll probably be fine if no matter what happens with the POW, but, you know, like, I'm usually just kind of anti trying to fork out ASICs in general.
Yeah.
It's sort of you're playing a whack-a-mole game. So, and especially since we're moving to ETH 2.0 sooner, I hope. With ETH 2.0, I think just, hopefully we can get there. I think scaling's getting better, but that they just sort of move slowly.
Yeah, and there's a lot of work to go. I mean, with the ZK rollups, the optimistic rollups, and there's a lot they have to build out. But, it's a trend in the right direction. Now, speaking of that, let's talk about not just alliances, but actual meaningful collaborations technologically. Matic, Harmony, Cosmos, Bitcoin ? Because your ethos is about censorship resistance and decentralization, the plan forward, you're starting with Matic. Can you just give us a bit of an update on what's going to happen there?
Sure. So this is the alternate chain structure that we're building. If we're taking a look at all of these other protocols, so that are non-Ethereum client-based, and we're trying to figure out how we can support them. The general idea is that, they obviously, if you're on Cosmos or any of these networks, they can't read Ethereum because they would need an oracle to do that. But how can Tellor sort of port over to their systems and provide data? And we've created a way for them to do that. We've been in talks with their teams, and so we're starting to so we have the code up on GitHub. We're
Awesome.
testing it now, and you guys can go see that. And now we're trying to talk to projects we're building on those platforms to see who needs a decentralized oracle there as well.
Awesome. So the alternate chain structure, that's no doubt something you're planning forward in the future with even projects you haven't yet talked to with regard to potential platforms, because you're not just working with Ethereum either. In the future,
Right.
I would imagine you've referenced Cosmos and you know them from some time ago. So the agnostic nature of what you're doing is real. You do support DeFi, not necessarily one specific platform.
Right. Yeah. We definitely want to be able to support multiple different platforms wherever the demand is there. Because the principles of how we build Tellor can be easily ported over to multiple things, and the real thing that you want to leverage is the network, is the community, because that's the thing that that's the special part about Tellor. That's what we're trying to build. So, like if other people can leverage that community that reports data, that's where the value is. That's where the value add is.
And it's just exciting to see all these different developments. I mean, the EIP 2362, if that's the correct number, that's exciting as another with the standardization. Now you're talking about another development, trying to build out more collaborations, partnerships for the longevity of Tellor. I mean, there's a lot going on. Some other things I've written down perhaps as goals for 220, because you referenced that it's not good to just put forward promises, but you did reference things like you really want to focus on the areas like stablecoins, lending, betting, options, insurance as potential clients. So are you moving that direction? Are you confident now that you're getting, through the support of your contacts and your investors, are you getting more interest in those arenas of DeFi?
Definitely. Yeah. Those will probably be, people are starting to realize like the importance of oracles. Like I can't stress that enough. Like people get it now. They've seen enough hacks on the oracle systems that they're like, okay, we'll call these Tellor guys. They seem to have something different. So yeah, it's looking really promising for DeFi, because especially with the buzz growing around DeFi in the Ethereum space, it's been really helpful for us that we've sort of kind of fallen in with a lot of those projects.
Awesome, Nick. Now, what about the risks of monopolization, or the risks of attack, or the risks of essentially just trying to overthrow a network? Are you concerned at all about any of that, given that you, A, are so illiquid, B, there's not that many miners yet, and it's potentially possible to go and, have a significant market share of TAV?
I mean, maybe you could potentially vote. The real way to break Tellor, so even if you broke the mining network, you would have to, you could submit a bad value on Tellor, and then you would have to, we would dispute you, and you would have to win a vote. So meaning like up to like 51% of the tokens you would need,
which is a fair
depending
bit
on how many
even
people
now.
would vote. Yeah, I mean you couldn't even buy them.
Like
You know, like there's not enough liquidity there to buy it. You know, like you'd buy up all the order books everywhere, and you'd maybe get 5% of our tokens. So like that, it's sort of a good thing that you don't have the liquidity because you skyrocket the price.
Yeah.
So like that's really where the security comes from. So, you know, I think it would be really hard to sort of break it, especially at these stages, unless you did, you know, slowly accumulating for
And
months in different addresses.
Exactly. And Nick, just finally, just to reference some of the sort of educationally centered efforts you're making to be known, I just wanted to plug a few things. You're looking at things like workshops, hackathons. You do a monthly medium, which is, you know, comprehensive. So thanks for doing that. You're looking at legitimate efforts to, you know, interact with other and collaborate with other members of the real DeFi space, like going to consensus, as I understand, things like that. So it looks good for 220 for you in terms of the way you're approaching information output.
Yeah, you know, we want to make sure that we're continuously kind of educating people. You know, as you've mentioned, the weekly podcast, hopefully everybody comes and joins our weekly calls. And then, yeah, we want to have that kind of good amount of content out there. We want to make sure that it sort of fits and people can see where we're going, and
for sure,
just really talk to people as much as we possibly can. And yeah, we're at all the events. So
yeah, and I respect that. I mean, I'm hoping to come across to consensus as the one thing that I might get to. We'll see. But also, Nick, I liked that there was some of that autonomous movement in the mining pool sector. That's not something that's initiated by the Tellor team, but there's starting to be, you know, more support, more interest in collaborating to try and do some mining, you know, when people can't necessarily be a miner themselves.
Yeah, so you know, we had one guy who built out a pool already. So he built a Tellor pool, and there's 2 other pools in the works now. So it's really interesting, you know, seeing like community members just starting to run their own pools. And we're all supportive of it. You know, we try and help them out as much as possibly can. So it's yeah, it's fun. Just seeing kind of that organic growth, and you know, like whenever you see like other people who are, you know, like they talk to you, and it's basically like Tellor is their full-time job, and they've like never met the team.
Right.
And so it's super cool.
Absolutely. And, you know, Nick, you know, again, not to FOMO, and as I've mentioned, I am an investor with a few ETH that I threw in. And then I actually am going to be looking at the mining aspect. I really want to look more at this utility. I think it's really changing the game for a lot of people in their mindset. But just with things like the shilling of projects recently, we've seen some of the market movements and some of them just really insane. And recently I wrote to you and I said, you know, are you a member, for example, of the EEA, or do you know about Eminent? So I asked you those because I legitimately wondered, you know, are you part of them? But at the same time, I didn't want to ask because of the potential for the token to pump. So are you looking at alliances or alignments, or, you know, working with, you know, groups like this in the future? I don't really understand the full nature of what's required of something like the EEA, but I just want to get your take on it.
Well, I know some of them have like hefty joining fees.
So there's fees involved.
You know, yeah, like we're not really about fees.
I didn't realize that. So you have to pay to go into EEA?
I believe so.
Right. Okay.
And you know, we're not. So we're sort of anti-fee as a stance, and then other things, you know, we also don't like, you know, enterprise really isn't our forte. You know, a lot of these kind of alliances and these consortiums and things like that, they're more focused on like, I like to call them like the hyperledger crowds.
Yeah, I mean, we're looking at a different kind of enterprise really though, aren't we? Like a more autonomously geared one, because enterprise
hopefully more of them are
centralized.
Most of the ones in those like alliances and stuff are, and you know, it's like, what will it get us? You know, like I don't care. Yeah, like, you know, we don't. We don't
You're
want to
all
partner
about
with any of the
DeFi.
banks anyway.
Yeah, well, mate, you know, to finish off the interview, thank you so much for the time. I really love
Yep.
talking with you. You're legit. You're in the space because you want to be here for the long term. And the Oracle, it's an absolute necessity. That's the conduit. That's that bridge that makes a lot of these data feeds relevant. It's the only way that they can happen. And we haven't yet seen the likes of a decentralized one really take hold and showcase what this can do in concert with Ethereum or something like that. I really respect that you are doing things, you know, the tough way. It's not easy to have the slower, more expensive offering at the beginning. But like we've seen with Ethereum, Nick, we know it's possible. We know that there's a grassroots movement happening right now, and I really, you know, hope people start to listen more to those who are here for the long-term viability of the technology, as opposed to those short-term shills. So Nick, keep building, mate, keep going, and I will absolutely be here as a free ambassador to continue to help talk about Tellor.
Thanks, Brad. Oh, so are we letting our hair down now?
Yes, we can now.
We can.
We
All
have,
right.
we have to just show that we do actually have
We have hair.
the feral hair.
Yes.
It's done.
Oh.
It's down. Feels good.
All right.
Thanks, mate.
There we go. All right. Thanks, Brad.
See you, mate. Cheers.